Hi everyone, I'm Chris Salviati, Senior Economist at Apartment List, here to walk you through the latest trends that we're seeing in our rental market data. So let's start off taking a look at what's been happening with rent growth over the past few years and see where 2022 lands within that context. So in the years leading up to the pandemic, rents were trending upward, but at a fairly modest, consistent pace. In 2018, we saw rents increase by 3.5%, followed by an increase of 2.3% in 2019. Then in 2020, we actually saw a slight decline in rents of 1.5% amid the economic disruption of the pandemic's early phases. That rent decline was driven by a drop-off in demand as a lot of Gen Z and younger millennial renters decided to give up their leases and wait out the pandemic back home with family. That was followed by one of the craziest years for the rental market in recent memory. In 2021, all of those young folks that moved back home decided that they were sick of living with their parents and struck back out on their own. At the same time, we were seeing a lot of roommate households break apart and those folks also trying to find their own apartments. And so this led to a very significant increase in household formation, which butted up against a severe lack of available inventory, driving these really sharp price increases. So in 2021, we saw rents skyrocket by 17.6%, and the national median rent increased from $1,098 to $1,292. Now moving forward into this year, rent growth has cooled off, but remains fairly elevated. So in 2022 to date, from January through September, rents have increased by a total of 6.8%. Again, that's a really rapid cool down from what we were seeing last year, but that's still going to be the second fastest year of rent growth in the history of our estimates, which go back to 2017. Now taking a look at what's happening this month specifically, we actually saw rents decline by 0.2% month over month in September. This is notable because it's the first time that rents have fallen on a month-over-month basis since last December, and this actually represents a significant return back to pre-pandemic seasonal trends in the market. So it's typically the case that the fastest rent growth occurs in the spring and summer months, followed by a slight decline in rents during the fall and winter. That typical seasonality was disrupted by the turbulence in the market over the past couple of years, but now we're seeing a return to some of that normalcy, with this month's decline happening with a timing that is right in line with what we would normally see in those pre-pandemic years. So this indicates that we're likely to see rents continue to fall modestly for the rest of the year, implying that year-end rent growth is probably going to end up somewhere around 6%. Again, far slower than what we saw last year, but still well above that pre-pandemic rate. So now taking a look at the supply side, as I mentioned earlier, a lot of this rapid increase in rent prices has been driven by a lack of supply, and we can see that here in our vacancy index. So nationally, the vacancy rate before the pandemic, it was typical to have a vacancy rate of around 6.5% to 7%. But over the course of 2021, that vacancy rate very quickly plummeted down to a low of 4.1% last fall. In the time since then, it has been gradually easing, but that easing has been quite gradual. So now, as of this month, the vacancy rate has bounced back to 5.3%, which is a notable improvement over what we were seeing at this time last year, but again, pretty far from that pre-pandemic norm. So we are starting to see the market ease up a bit, but it does remain tight by historic standards. So now that we have a pretty good sense of what's been happening nationally, let's take a look at some of the regional variation in which markets have been growing fastest and slowest. So this table is showing us the large metro areas that have seen the nation's fastest rent growth over the past 6 months, over the past 12 months, and over the course of the pandemic as a whole since March 2020. When we look over that longest horizon, we can see that over the past 2.5 years, it's really the Sunbelt markets that have been, for the most part, seeing the fastest rent growth. In particular, Florida and Arizona, those two states account for 6 of the 10 fastest growing metros over that full pandemic period. However, when we look over the shorter horizons, it's actually some of the expensive coastal markets which had seen rents decline sharply in the first part of the pandemic are now making strong rebounds and have seen among the fastest rent growth over the recent months. So now this next slide is going to be analogous to the previous one, but here we're looking at the markets that have seen the softest rent growth as opposed to the fastest rent growth. And so what we can see on the full pandemic period here is that the San Francisco Bay Area is the only metro where rents are still slightly below the pre-pandemic level. But the other main thing that I would call out on this slide is when we look over the shorter 6-month horizon, the metros that have seen the softest rent growth are Phoenix, Las Vegas, and Riverside, California. Now, this is especially notable because these same 3 markets rank among the top 10 for fastest rent growth over the course of the pandemic as a whole. So I think what we're seeing is that some of these Sunbelt markets, which had been really hot for most of the pandemic, are finally starting to peak and maybe level off a bit. So to sum things up, like I said, we're now seeing rent growth in 2022 cool off quite a bit from last year's peaks, but remains pretty hot by historic standards. However, we are seeing a return to that pre-pandemic seasonality, and so rent growth is likely to trend modestly downward for the remainder of the year. And as I said, I believe year-end rent growth for 2022 is probably going to end up somewhere in the 6% range. Some of those Sunbelt markets that had been really booming for all of the pandemic now starting to finally level off. And some of the expensive coastal markets are continuing to rebound sharply. So I'll leave it at that, and I hope this has been a helpful update. If you have any questions, please do reach out. I, along with the rest of the Apartment List research team, love to talk about this data. So please send any questions to research@apartmentlist.com, and we will respond to any questions you may have. Thanks, and have a great day.